Hi there, Serial Trader here. I'm just going to try and do a quick update on oil and XLE before the Fed meeting on Wednesday, because I think we're about to have some pretty big market moves, and I suspect they'll be to the downside, at least initially. Okay, so let's just get into this. So this is the weekly chart of crude oil. So I think, I haven't looked at this for a while, but I think we're still correcting this initial impulse wave we had off the, wow, it's way down here, negative 40 or $41, whatever it was, bottom. Okay, and just quick labeling scheme here. So we had our wave 1 that topped out in August of 2020. We had our wave 2 pullback. Now that this is played out, we probably had our wave 3, something like this. So we had an ABC running flat, wave 4. And this was our kind of blow off top in wave 5 up to 130 a barrel when Russia invaded Ukraine. Obviously that marked a significant high at the time. And now this really looks like corrective price action off of there. So yeah, completed 5-wave impulse sequence off the bottom, and so far we're getting a internal corrective looking retracement. And really, what you would expect in a typical formation here after an impulse wave for the corrective wave is to get back into the prior 4th wave range, and often, you know, close to the bottom of the 4th wave for the most typical. So that would get us down to, I mean, let's call it around here 61, 62. Let's call it around 60. Okay, and that lines up with some prior resistance that would then look to become support from over here. Just kind of some chart structure stuff, right? So it looks like we could go a little bit lower here, around 77, close to 80. We could get definitely down into the 60s, maybe even, you know, briefly dip down into the 50s, although I don't think that would last too long unless this gets real bearish. And then, okay, so as far as off the top, there's some different ways you could count this. One that I'm kind of liking here would just be a double zigzag. Okay, so we got like a ABC down for W. Maybe this was the X wave, and now we're going to do an ABC down for the Y. So a 3-3-3. That would look okay to me. Or a little bit more of a bearish but still corrective interpretation would be, okay, so this is 5 waves down for A. I think about there, and then we had ABC up for the B. And then we'd be going down like 1, 2, 1, 2, 3, 4, 5, 4, 5. So a very extended C wave like that. But I mean, that would get us down into the, you know, 40s or lower. So I don't know, if things get real bearish in the overall market and economy, then okay, maybe that happens. But I think to be a little more reasonable or typical in your expectations, maybe shoot for low to mid 60s, at least initially. And then, okay, do we have anything on the short term that supports going lower here? So let's get it on the daily chart. I mean, yeah, like let's look at this. So far off the low that we made there in December at around $70, this looks like a classic 3-wave bounce and looks like potentially getting ready to turn back down here. Contained within a parallel trend channel. Okay, probably, you know, AC equality. Let's see here, A, B. So look at that. I'll just throw up some ABC labels here for you, just to illustrate. So that's basically your typical, you know, 3-wave bounce, ABC zigzag up, AC equality almost perfectly contained within this parallel channel, almost reversed right off that top channel line. And now looking to head down here. So yeah, if we just do like a reverse fib extension of this range, get some typical targets, 1.382 and 2. I mean, that would get us down to, again, 65 to, you know, let's call it high 50s, which lines up with that larger degree support structure, chart structure that we looked at there. So yeah, I think oil at least got another good wave down here to possibly finish something. And if it gets real bearish, then maybe we got a lot more down to go. But let's just work with that for now. Okay, so that's oil itself. Now, XLE. Bit of a different story here. This has just been stubbornly hanging out up here in the high 80s, low 90s. It's not really going anywhere. Like we peaked out, what was it, back here in June at 93. Then we cheesed out those highs, went to 94 in November, and now we can't even get there again. And now it looks like we're trying to turn back down again. So what do I think is going down here in XLE now that more development has occurred? One thing I'll point out is, so look at this bearish divergence on the RSI. This is on the weekly chart, so that's a significant time frame to have that kind of bearish divergence. So here we made a higher high, marginally higher high in price, but a clearly lower high in RSI, and looks like getting ready to turn down on both momentum, or in this case RSI. Momentum is just more of a broad term for various things, but RSI can certainly be included in the term of momentum. Anyway, looks like momentum's making a lower high and ready to turn down, and price looks like it wants to turn down from a marginally higher high. As far as the wave count, I mean, this has been tricky the whole time, but gun to my head, if I have to. Boy, it's tough too. Say we off the 2020 bottom there. Got the 1, got the 2. Maybe this was the 3. And then we had like a real weird looking wave 4. But you see we got overlap there, which I don't like. Tricky. Very tricky. Let's try this again. Not that it matters that much, because this is prior price action. We're kind of focused in on here now, but do want to still try and get it dialed in here. Yeah, okay. You would have to go like this. Okay. And then this would be like an A, B, truncated C, running flat. I mean, I don't like it, but kind of a force fit here. Something like that. And then this was our extended kind of blow off fifth wave. Now, okay. So what do we have going on? I think we're probably doing an expanded flat. Okay. So it seems like oil going down doesn't, well, at least right now, isn't affecting XLE that much. But I think if the market really goes down broadly and oil goes down, it's pretty hard to imagine XLE not being pulled along for the ride, okay? So in that hypothetical scenario that happens, which I think there's a solid chance it will, then that would kind of support that, okay, we have our A down, B up, and this is a clear three-wave move up to a new marginally higher high, so that's classic, flat or expanded flat or running flat behavior. Now, all that will make it either a running flat or an expanded flat is if the C wave makes a new low below A, that's an expanded flat. But if the C wave makes a truncated low, so a higher low above the A wave low, then that's just going to be a running flat. So if this is a flat, which looks solid chances that it is, we'll be looking for a 5-wave decline to finish in wave C. Okay. So I don't see any, unless you want to try and short XLE up here, which doesn't seem like a terrible idea, because the highs that you'd be short against aren't that far away. Like, let's just say you put your stop at 95 or 96, just a little bit above the range that we've been knocking on for the last however many months. Okay, put your stop there, go short at 89. That's a reasonably tight risk reward. So yeah, let's just say you went short at today's close. You put your stop up here at, let's just do it 95 or so. Your target is the bottom of the range. You're looking at a, what do we got? 3.92, almost 4 to 1 risk reward ratio. So that's a good, trade setup from that perspective. So yeah, you'd be looking for an impulsive decline in wave C. And okay, so we have some prior resistance levels around on XLE 61, 62, and then down here 59, and then our prior A wave low 65. So let's call it anywhere in the 50s to mid 60s would be a pretty sweet spot to be looking, certainly for a longer term position to get long on XLE. Because again, impulsive sequence off the low, and now a corrective sequence off that impulse high, and then we'd be looking for another impulse after that. Kind of same idea with oil, although this has been stubbornly hanging out near the highs where oil has not been doing that. Yeah, I just thought I'd get this out there before Fed Day on Wednesday, because I think markets are going to start moving probably on that or shortly after that. So I'd be looking to get long at lower levels here, as described on both oil and XLE. And do with that what you will, but that's my current take. All right, Serial Trader signing off.